What's going on, guys? This is the DeFi Crypto Alliance show where we're doing our best to be the bridge between our fellow entrepreneurs and real estate investors and the cryptocurrency world, where we feel like that is the biggest opportunity over the next year to 3 years, depending upon your outlook, which is what we'll kind of talk about more today. And so welcome. We're pumped to have you guys. Corey, take it away.
Absolutely. Corey Geary here in the beautiful country of Puerto Rico. Just absolutely, truly blessed to be on this journey with all you guys where we're going to be using cryptocurrency as that wealth creation tool and then using real estate as a wealth preservation tool. And it's been such an exciting time, even with all this bear market that we're going through. This is, not par from the course, from every other market cycle. We're kind of like right on cue as far as where Bitcoin's heading to, and we've got a little more blood in the streets maybe coming up. But this is the times to accumulate if you have the capability of accumulating or at least holding. The people sell here are going to be, I really feel strongly you're going to regret it in the future. You'll be selling your fortunes away, but this is the time for accumulation and the time for holding, the time for building, the time for learning. Get in here and learn, figure out how to do some of this DeFi stuff, why it's extremely cheap, and and build. Why everyone else isn't looking, why everyone's away from crypto. You have about 95%. I was reading a statistic, 95% of the crypto population, I guess, which is you would label as retail, has left the space. So, like, imagine these people are gone, and you coming in and participating now before they get back in means you're early to the cycle. Whether the cycle top is in middle of next year or a little earlier or the end of next year or 25, we don't have a crystal ball, but we definitely want to talk through some of these scenarios out. This is what today's show's all about. And I even have this conversation, Dane, with one of my ETHWell friends. In fact, it's your friend too. You know him out here in Puerto Rico, and he's got some thoughts on this whole whether or not we are going to top out somewhere in 24 or if we're going to go to 25. It's all hard to say.
Agreed. So right now, there are two prevailing thoughts, and it's interesting to see them go around Twitter and see the feedback. So the first here is a traditional crypto cycle that I think this is what most people believe in right now, where we've seen this time and time again. And if these cycles continue to play out with the Bitcoin halvings, theoretically, we should see the next top in 2025. In fact, it'd be September of 2025 should theoretically be the next top if these cycles continue to play out. Now, I found this really interesting, and I don't have a huge Twitter account, so how relevant this is, I don't know. However, it's interesting to see the interaction on this tweet. So this is 62 likes, 9,000 people that got this as far as engagement. And then
not bad.
Yeah, not bad.
That's not bad.
And then my second tweet, you could see this one I got hardly any interaction with. And this is the second prevailing thought. And this one is far less common, I feel like, where, essentially what some of these people are saying that are smarter than me, that are paying attention to a lot of the charting stuff and whatnot, is they're saying that, hey, in fact, let me see if I can blow this up. So they're saying they're called Elliott waves. Now, I'm no charting specialist, but the way that I've understood it is that we're looking at the fifth Elliott wave right now, and that these cycles continue to get elongated. And you can see that here with this chart, where each one of these crypto cycles gets elongated, and that right now we're in the fifth Elliott wave of this current cycle, and that the last rejection, the last Bitcoin pull back to about 15K was just a period of consolidation. In fact, there's some of these people that are saying that if you wouldn't have had the FTX debacle and BlockFi and Celsius and Voyager and all these guys, that they're thinking that price would have found more stability around the 30 to 40K range as far as Bitcoin is concerned. Found stability there, and then continue to grow into 2020, end of 2023, early 2024. And if this type of cycle plays out, then theoretically the peak would be right around the Bitcoin halving, which will be March or April of next year. So we're about 8 to 9 months as of right now from that place. And so it's interesting to be able to see two trains of thought and try to prepare yourself for both. And I think that's incredibly important. Most people that you talk to that have been around in crypto, many of them didn't take profits when they wish that they would have during this last peak. And we want to be here trying to help educate everybody to make sure that you're well informed to try to figure out when to take profits for you and when it makes sense for you, and how to play these cycles correctly. So, Corey, what are your thoughts as you're looking at these two prevailing thoughts as to when we should see or could see the next crypto top? Is there one of these directions that you're leaning?
Yeah, I'm starting to lean towards the what was it called? The short gated or the
I think it's called the right translated cycle.
Right translated cycle. Just because it lines up not only with the Elliott waves, but also with the where the stock market is at in its current condition, as far as liquidity flowing in and out. There was a great video, and I think you're the first to share it, Dane, was Colin Talks Crypto, who showed like all the indicators of the stock market doing its normal, typical rollover. And the timing is right around where the Bitcoin halving is at. And he even, went a little deeper, and Sami's talked about this too, where basically the halving is always lined up with a nice stock market bull run, where we've never had a time where a halving lined up like where the stock market rolled over and started having a bear market. And that, basically the cryptocurrency markets are more revolvent around what's happening on the S&P 500. Because let's get to that's the granddaddy of everything. If you ask me, that is like where the liquidity comes from. Like that is that is the U.S., that is the United States, and the condition how the United States is doing. Like there's so much money that is determined based off that one asset. It's ridiculous. It really does control a lot what's going on in the world, whether you like it or not. I mean, so that, it's just been, coincidental that, the Bitcoin halving was lining up perfectly with the stock market bull runs, and that it's not it's not the halving that was pushing off the bull markets in prior market cycles, that was actually the S&P 500. And so it's interesting, and we don't know yet because we've never had this happen before since Bitcoin's been around. But I've got a feeling, man, that that's really the case, and that and you gotta ask yourself, and Sami talks about this. He's like, what are the chances that this does happen? And whatever percentage you give that chance of happening, like maybe it's like 50%. Well, then maybe you should take 50% off the table when that time comes, if that's what the odds you're giving it, right? And then you leave 50% in to see what else happens. And it's, if we get up to that like 75, 80K during that time, and we see like everything else kind of doing a short run, man, for me, I might go even a little heavier than 50%. I might take like 70% off the table and be like, okay, I'll leave a 30% bag in there just in case I'm wrong. And then if I'm wrong, who cares? I still got 30% of my bag pumping to the moon, and I'll be happy. Now, will I be like, oh God, I wish I'd have left it all in? Yeah, but you got to have some risk. What's the word I'm looking for?
Risk management. Risk
management in this. Yeah. It's just, there's so many indicators pointing to it. There's so many people talking about it. Watch. I don't know if you could pull that. It was only like a 5-minute video from Colin's Talk Crypto. That was a great video of where he was explaining all the indicators from the stock market, where the inverse yield curve is right on cue. And with everything that we're, coming up, we should see a perfect rollover coming up right around the halving, which would also line up, man, it's amazing. It would line up with the whole, the pivot from the Fed. And you got to remember, guys, usually when the Fed pivots, the crash comes after. That's usually how it works. People usually don't get that. They confuse that. But it'd be very interesting.
Yeah, let's go ahead. In fact, let's play it. It's only a 7-minute video. I thought it was interesting to consider, and some strong data points.
Yeah. Make sure you share your sound when you play. I know sometimes
Yeah, let me do that right now.
It's very good. This guy actually lives in Puerto Rico. Actually, he's a Hetzican too, guys. This guy's a Hetzican. He bought the SEC FUD.
All right, I'm going to switch my audio over. I'm pretty sure this will make it play. Let me know if you can hear it.
Okay.
Be somewhat commensurate with the size of the yield curve as well.
Yes, we can hear it.
So let's look at how this plays out. This is what happens, okay? First, you have a yield curve inversion indicated by red. That's the first.
Can you hear it?
I can hear it, yes. It's not the full screen, though. I don't know if you're able to.
The second step is you have the Fed funds rate climbing, plateauing, and then dropping. Coincident or latent with that happening, with the Fed.
Hold on.
Yeah. It's all right, man. This is how we learn.
There we go.
There we go.
Funds rate climbing. So let's look at how this plays out. This is what happens, okay? First, you have a yield curve inversion indicated by red. That's the first step. The second step is you have the Fed funds rate climbing, plateauing, and then dropping. Coincident or latent with that happening, with the Fed funds rate climbing, going flat, and dropping, you have the stock market peaking out, usually a little later, and usually crashing after that fact. And usually it crashes to its bottom after the Fed funds rate has gone all the way back to zero, or basically back to zero. That happened in the 2000 bubble, that happened in 2008, and that happened briefly in COVID, where you have 1, 2, 3. You have yield curve inversion, Fed's fund rate up and down, stock market crash. Yield curve inversion, Fed's fund rate up and down, stock market crash. Again, here's a little red blip. It's hard to see, but even in COVID, yield curve inverted briefly. Fed's fund rate up, down, stock market crash briefly. It seems to be somewhat commensurate with the size of the yield curve as well. Well, what do we have right now? We have the largest and deepest yield curve inversion that we have seen in over 40 years. This is bigger than 2000. This is bigger than 2008. This is no small yield curve inversion. And so if we go back again to this chart here, what does this massive yield curve inversion indicate? What is it predicting for us? Well, it's showing that there's a recession coming. And so what's the sequence? The yield curve inverts, the Fed raises the interest rates via the Fed funds rate, and that's exactly what they've been doing. And they're nearly done raising it. It seems like they're beginning to plateau. Well, what happened in the past cycles? The exact same thing. We have it raising, plateauing, and then dropping. And see how the crash occurs? If you look at the Fed funds rate right below the stock market crash here, you can see that it went back down to zero. That's basically the bottom. Now, I want to introduce one more thing, and this was not present in any of my past videos, and that's the fact that we also have another correlating, corroborating metric. That is the unemployment rate. Notice how every time the stock market crashes and it's at its bottom, the unemployment rate is at its, or near its top. See, here's the stock market crash in 2008. Here's the unemployment rate near its peak. If you line it up, it's right there. It's near the peak, right? And what you have also conversely, you have every time the unemployment rate is near its lowest is when you're at the peak of the stock market. That's very interesting, because where are we right now? We're at the lowest or near the lowest. What do we have? We're almost making a new all-time high. It matches almost perfectly. And so I'll give you another example. Back in 2000, so we had the yield curve invert, we had the Fed fund rate increase, decrease. We have a crash right here, stock market crash in 2002, the bottom, right? And that is approximately where the peak relative to that cycle was for unemployment. And let's look back even further. How about the peak for that? The best time to sell, right? In 2000, August 2000, unemployment was at its absolute lowest. This pattern repeats, just like all the other patterns repeat. So how can we use that? Use that by not only looking at when the Fed funds rate flattens off and begins to drop, because that's telling in itself, but we can also look at the unemployment rate here. And we know that we're not near the bottom of the crash because unemployment is basically at its lowest ever. We need to see unemployment start to go up. And that's exactly the Fed's goal, if you haven't been listening. So when the unemployment rate begins to climb like this, that's when we know we're getting toward the bottom of the stock market. That's when we know the bottom will occur, because when we're at the high or the relative high, that's where the stock market has crashed to its bottom. So people who think that there's not a crash coming are ignoring everything on this chart. All four of these charts, they're ignoring. They have their heads in the sand and they're saying, oh, we're going up to the right, up only. Who cares? Who cares about the unemployment rate? Who cares about the Fed funds rate? Who cares about the yield curve inversion, which all say the same thing? They all say that a crash is coming and that it's not yet. Okay? So when we see the unemployment rate climb, when we see the Fed funds rate flatten off for maybe a year and then begin to drop, red alert, like the stock market crash is coming. And I don't say this to be negative. I'm saying this because it's what the charts are showing. And it's what the government has given us. You know, they didn't hand us gold on a silver platter. They handed us shit. So now we have to deal with that. And so we need to be nimble and we need to be able to turn a disaster, a manufactured disaster, which none of us wish was happening, into an opportunity. Because any disaster can be turned into an opportunity if one is positioned correctly. And that's what my entire thesis is about the next several years. That doesn't mean that we're immediately crashing, because note there's a delay to all of this. Again, we're at the lowest point of unemployment. We're at the beginning stages of flattening off for the federal funds rate. And what we have seen in the past, let's look right here. When the federal funds rate first flattens off right here, what do we have with the stock market directly above it? This, from here to here is a massive climb from September 2006 to November 2007. We have the market climbing. That's why the market is climbing right now, because it can remain irrational longer than we can remain solvent, than we would expect. It doesn't make sense. You know, it's a yield curve inversion. Market should be dumping. And it is, but it's in slow motion. It's a slow motion disaster. It's a very slow motion lag. The lag fools everyone. Everyone thinks that the markets are doing great. I guarantee you, in 4 to 6 months, if the market continues going up, people are going to be so damn bullish. When it breaks its all-time high, people are going to be so freaking bullish. Oh my God, all-time highs. The stock market is breaking new all-time highs. Recession canceled. Watch this. The headlines will say this. Recession canceled. There's going to be a devastational crash after that. Do not be fooled. Unless it invalidates every chart that you're looking at right here and the past 30 years of data or more. Now, it depends on what time frame. I think I'd have to add that caveat, because if you only plan, like I said at the beginning of this video, if you only plan for the doom and gloom situation, you could miss a tremendous euphoria, tremendous parabolic climb up before that crash. Now, it's a bit of a game of chicken, because when you sell, that is the guess. And I'm not trying to say that I am going to tell you exactly when that is, but I don't know. I'm playing the game of chicken here with you. I'm trying to guess it correctly so that I can take profits and not have all my holdings subjected to the biggest downturn over the next several years that we have seen in 30 years, perhaps. But it is a long lag, and that's why so many people get fooled.
That's great. You know, the only problem is he's right with the timing, because on the chart, he said, you know, it was September, that one where he was measuring to November before the last, which would put us, you know, towards the end of 24, or does it line up more around the Bitcoin halving? This is the part that we're not going to know, right? This is the part that it's going to be difficult to figure out when the rollover happens. You know, is it, you know, towards the middle of next year, towards the end? But I do believe there's a high probability of that playing out. I mean, maybe there's a small percent chance that the government turns the money printers on like crazy, and we last another year. I don't know. It's like, and it does take us to 2025. And then you have your normal market cycle for crypto. But I don't know, man. I don't know if I believe that to be true. You know, you see all this, I don't know if you've seen it, Dane, all over Twitter. There's people saying that the government's going to have another COVID shutdown. And it's like, you know, if they do something like that, the money printers might get turned back on. You know, these are all just kind of theories. And then that would give them an excuse to, you know, for the Biden administration to, you know, get themselves back in office. Who knows? There's so many things that could play out. But this is, I think, more of a realistic expectation that we all need to have to treat our portfolios accordingly going into next year. Doesn't mean we can't make a bunch of money, guys. There's going to be a lot of money. And in fact, it means you get to make a bunch of money earlier versus later.
You just make it faster, right?
That's all it means.
Right.
You're not going to get the big giant gains. Maybe you don't get the 1,000x that you were hoping for. I mean, I was never planning on 1,000x anyways. But, you know, it gives you something to think about, make some money, get out of the market. Doesn't mean that you can't play the markets again. I mean, Sami thinks it's going to it'll break the 4-year cycle, and like the year 2025 will be the accumulation zone again. And then 26 will be the next bull run. I mean, I don't know. This is all, now we're getting into speculation zone, and no one's got a crystal ball, but you definitely need to look at this stuff, because I guarantee you, and he's right, and Sami says it too, every influencer on crypto YouTube is going to be screaming, Bitcoin 150K. We're going, you're going to see the headlines, and man, it would just, you got mom and pop buying all the tops, the Bitcoin ETF, you know, that's when they're selling that to your 401k.
Well, they're already saying it. I'm seeing more posts. They're not super frequent right now, but I'm seeing some where they're saying ETFs are going to get approved early next year, Bitcoin to 250K.
It's so stupid.
It's just, yeah, it's
that's what we call exit liquidity at its finest, right there, man.
Yep.
And
absolutely.
yeah, it's just something we need to take in consideration. That's all, you know. It's a serious consideration, very serious consideration.
And make no mistake about it, I think the likelihood of crypto decoupling from the stock market and going on its own parabolic run while the stock market is plummeting is practically zero. I don't think there's a scenario where that plays out. And in fact, so here's what I think is going to happen. It's interesting talking to more and more people. And in fact, so I was gone this last week hanging out with friends and family on the lake, and we went houseboating.
Nice to get away for a while.
So nice.
You picked a good week, man. Crypto Twitter and everything, it's been just like so toxic. And so you're like, you should have stayed a month.
I should have stayed a few months, man.
Right.
And it's interesting because everybody gets the sense that we're in this weird, like, or at least the people that I'm talking to, even the people that aren't in the markets and paying attention to things like we are, everyone seems to have this sense that things are not well and something is not right, and that something is going to break and it's not going to be good for for the masses. It's really interesting to see that feeling and that instinct that many people have. And so I think that with that being the case, I think that people are going to show up at the ballot boxes. I think they're going to vote. I think that the presidency is going to change in the United States, and they're going to vote Republican. We're not going to get into the politics of whether that may be right or wrong or how you may feel about that.
Right.
It doesn't matter to me.
We don't.
Yeah, it doesn't matter to me.
We don't give financial advice, we don't give political advice either.
Yeah, we don't want to get into that. So, but I think that people are looking for change, especially if there's somebody that has a strong platform. That it's interesting because I can't find anybody that likes Biden, and I can find a lot of people that don't like Trump, and so it's a really interesting proposition where can there be a strong candidate? And frankly, I don't even care if it's a Democrat, but can there be a strong candidate that can run on a platform that can say, hey, I really like, or I shouldn't say I really like, but there's been a lot of intriguing dialogue. Have you seen this dude? I think you pronounce his name Vivek Ramaswamy. Have you seen this guy? He's an Indian immigrant. His parents came from India, and the dude's sharp.
He's running for presidency.
He's running for presidency,
Oh.
and I saw this article more recently where he's jumped in the polls like very significantly. He's third right now in the Republican race, and his whole platform that he's running on, which I think is a strong one, is he says, look, I'm running on a platform of truth and openness. The American people don't need to be lied to anymore. We can accept the truth even when it's hard. We don't need these 3-letter agencies trying to do better than they think that the rest of the population would actually choose or think is good. We're tired of all that. And so he is running on. Yeah. And I think most people agree with that. And so that's kind of his platform that he's running in. He's not claiming that he's, this God that has done no wrongs. He's very you should go check out some content. He's done some excellent interviews. And I think it's a unique opportunity for somebody like that to potentially swoop in and get market share. Because once again, I don't think there's anybody that likes Biden, and there's a lot of people that don't like Trump. And I think that leads to an interesting scenario where you could have a third person that could, I don't know if they could win it, but they could take some strong market share. So either way, though, I think you have somebody that comes in that's looking to do different things with the economy, do things different politically. And with that being said, I think that's bullish for markets, certainly short term. And with that happening,
which lines up
perfectly. Bitcoin ETFs get approved, Ethereum ETFs get approved. They're already getting approved in other countries. You see that in the United States end of next year, and or you see those get approved sometime early next year, most likely. Presidential election, I think it all lines up where we see the right translated. I think I'm saying that correctly. The right translated cycle, where it's more likely that we see the top next year. And I'm with you. I'll be taking really significant profits, if not everything, off the table, because I think it's more likely that the stock market rolls over sooner rather than later. I don't think we see the stock market bullish till 2025 to see a more typical Bitcoin halving cycle, pump, all that type of stuff.
Yeah, and another thing to really think about is, I swear everyone thinks the market top is in November of 25. From September to November of 25. If the whole crowd thinks this way, then most likely it's not going to happen. And it wasn't, I was talking to my ETHWealth friend, and even though he was doing Elliott waves and stuff like that, it was never really understood the market cycles, because this is our only our third, right? It's our third cycle, fourth cycle. like, yeah, the last cycle people started understanding, but like the cycle before that, it was never really understood, right? Like there was this 4-year market cycle. Now it's like everyone thinks the market cycle is the tried and true way, and that's what's going to happen this time around. If everyone's thinking that, I tend to believe that's not how it's going to play out. But we could be wrong too. So this is not financial advice.
Yep. And the one caveat I would give to that, though, that idea that everybody's thinking that 4-year cycle, the people that are left right now in crypto are not the retail masses that are coming in and going to create charts that are parabolic. You know what I mean?
True.
Like if you're in right now, you're a little bit strange.
Yep.
There's no ifs, ands, or buts about it. Like if you're in right now, A, you see opportunity, but B, like you're a unique person if you're willing to be in now. You just are. And so I would say that it's a relatively small demographic that's in right now that's thinking those things. And I think the masses that will come will greatly outweigh the people that are in right now. And so that's where
just how just how I talked about in the beginning of the show, there's a statistic about 95% of all crypto has left. And so like those people, what do they believe in or what do they think? I guess they see green candles and they just want to buy. And that there is some truth to that. And that's in every asset class.
Oh, for sure. I remember being new to crypto and you're like, oh, this chart's, look at it. It's so cool. It could go so much higher. And you were the top.
Yeah. Oh my God. I've been the top so many times.
Oh man. Yep. Absolutely. Crypto Sloth. What's up, Crypto Sloth? Hey, I'm not strange. Hey, if you're here, you're strange with all of us, buddy.
You're like a savant, man. You're like on another level. Like your way of thinking, and man, which is good. We love you. But that is not average retail.
No, absolutely.
Your analysis is not average retail. The way you think is not average retail.
Yeah. What's up, Norbert? Yeah, agreed. There's a lot of unforeseen things, certainly in relation to the economy and the Bitcoin cycle right now. And so I think it's hard to bet on 2025. Now, maybe that does. Maybe it plays out perfectly. But man, the last thing you want is to have bought these lows that I know that many of us have, and to see a pump into 2024 and think that we're going into 2025, the super cycle, and to not take profits like most people you talk to today. And they're like, oh, I can't tell you how many people I've seen in Telegram that are like, I was financially free forever if I would have taken enough profits this last go around, but they didn't. And you want to try to save yourself from being that person and making that mistake.
I'd rather be the guy who has a little, be honest, man, I'd rather have regret of that. Like, oh man, I took too much off the table and I did another 5X or whatever it is, than the guy who, is like, oh man, I didn't take anything off the table and it all went back 90%. Like I weigh the two scenarios in my head, right? Like if I end up not taking profits and I play through that game thinking that we're going to go on the 25 and then it rolls over, where am I at and who am I? Versus like the opposite, right? Where it does keep going, but I did take profits. Like which scenario am I better with? And I'll tell you, I know which scenario I'm better with.
Oh, agreed. I would rather bet on more surety in that scenario and taking what you have now on the premise now. And that's the thing, like it's funny to talk to. So one of our island boy buddies, I think he makes some really solid points where some of the people have gotten, concerned is Pulse Chain going to pump? Are these other assets that we like on Pulse Chain going to pump? And I think that it's incredibly likely that those things do just fine when everything else starts to pump. But like many people that are smarter than us say, we need Bitcoin and we need Ethereum to carry the weight. We need those to do something before the rest of the market typically starts to see some real sustained gains. You can get some of these, if you went and bought PDAI and you were one of the few people that bought it at the bottom, you could have got some gains. But right now it's just a bunch of people taking buckets of money and rotating those buckets to other places and trying to beat out everybody else and take profits and gains. Like that's all it is right now. And so, in order to see sustained sustained gains over a longer period of time, you need Bitcoin and you need ETH to lead the way. Yep, you need retail. Absolutely.
Otherwise, we're not going nowhere. So.
Yep. Yeah, this is I think this is such a strong point, such a strong talking point. Now you've got to figure out your own risk to reward ratio and what your risk profile looks like for you personally. But man, the opportunity to buy the blood right now and things that you believe in, I mean, people next year are going to be calling us lucky, I think. I feel really confident about that. People are going to be saying, gosh, why were you so lucky and that you got in near the bottom? It's not luck. We put in the time and we're willing to sit through the blood and the despair and the depression. And we feel it too, just like you guys. Like this isn't a lot of fun. But man, like that's how you change your family tree. You have to do things that other people are unwilling to do when they're hard.
Well said.
Yeah. Blood in the streets. I'm running out of bandages. Oh man, that's the truth. That's what it feels like right now.
Same here. Oh man.
I feel you. Oh man. Crypto sloth. No, I'm a weirdo. Absolutely.
Most of us in crypto are.
Oh, that's the truth, right?
We're a unique set of the population, that's for sure. Especially the ones that are in now. You'll get all the people coming in later, and they'll think they're special then. No, the ones that are in now are special.
Yep, absolutely. Now, we appreciate you, Crypto Freedom. Appreciate the feedback. We're here to try to help. So if you guys are late tuning into the show, this is one that I'd heavily recommend. Go back and watch from the beginning. This isn't, we started late, so this isn't a super long stream. I think it's really important to view timeframes in the market to try to determine what you think the likelihood is for when the crypto top is going to be or near it. Because once again, almost nobody buys a perfect bottom and sells the perfect top. And the beauty of it is you don't need to. If you can generally buy at good accumulation zones and generally sell as the market is finding a nice top, then you'll be in a really unique position, especially here in crypto. And so I heavily recommend going back, watching, determining what your thoughts are, and exposing yourself to people that are saying different things. On Twitter, I've gone through more recently and followed a bunch of Bitcoin accounts that are saying things that generally in the past I would have heavily disagreed with. But once again, I want to make sure that I'm shining light into my blind spots so I don't get caught with my pants down. I'm not doing that again.
Yep, agreed.
Yep. Well, cool, guys. We appreciate you tuning in. Corey, is there any other talking points you want to cover before we jump off today?
Nah, that's about it, man. I appreciate everyone, being patient with us while we're on vacation. We're back up and going now. We're here to, bring the best, me and Dane's best thought processes through all this blood that we're going through and the market that we anticipate coming. We, don't make no mistakes. We still feel that we're in the right place at the right time, and that this is going to be what creates, generational wealth. Is when you have to buy or at least hold. You don't have to buy it; you can hold through it. Where people are the least convinced, or they have the least amount of conviction in that, that asset class, and that is right now, as you guys know. And so you need to be a true believer if you want to get to the other side. And this is how we earn that luck that Dane was alluding to a little bit earlier. Is sitting through this and still having the fortitude to go, oh, man, this is it. We're still here. We're still in the right place, because it will shake your resolve. When you wake up in the morning and you see that massive red candle, man, your resolve gets shaken. And so you just got to keep believing, keep pushing on. And this is what, obviously at the end of the day is going to change you and your family's, trajectory. So this is not financial advice. Obviously, this could be in any cryptocurrency. It doesn't have to be in our ecosystem. You can go find ones that you feel strongly about, or you can even be in the stock market. We're not telling you what to buy or how to buy or we're telling you what me and Dane are doing. So it just has, you got to make your own decisions. Everyone here's a big boy. And so, but right now, the time of the bear markets and uncertainties, when wealth is made, it's in every asset class, including real estate. The guys who bought in the 2009 to 11 crash in real estate made millions and billions. I remember, Dane, there was a section of, we'll kind of end it on this, in Phoenix. There's an area, it's called, it's on the west side of Phoenix, and people were scooping up houses for $25,000 and $30,000. And we're talking 3-2s, 1,500 square foot, 1,800 square foot houses built 1980s, 1970s, good quality houses that you can go and do some remodeling to make it look beautiful. They were picking them up at $25K a pop in 2009 to 11, going down the auctions. Nobody was buying. It was the bottom of the bear. Everyone thought, I guess everyone thought real estate was dead. It's so crazy to think about that, right? It's in every asset class. And these houses were selling at a 10x last year and the year before last. They were selling for $250,000, $300,000. They made a 10x return on their money because they bought the blood and they believed when no one else would do it, when no one else would go down there and do it, they did it. Even though it was scary, they pulled the trigger, and man, did they ever pay off for them. A 10x. That's what you get on crypto.
That's a much shorter time frame. Mm-hmm. We have an area in Utah just like that, and the guys, it's funny to talk to the guys that were at the auctions. They're like, there was hardly any of us there, at least initially. There were hardly any of us there, and we would joke when somebody would come in and they pay like 40 grand for a house, and we're like, oh, they paid way too much for that house. And yeah, those houses today are trading for $400,000, $500,000. It's wild. So
it's the same. It's the same thing. That's the stage we're at in crypto. It's just that's the stage we're at in our ecosystem. There's a lot of people who left, a lot of people who are not believing, but we still have the builders. The builders give me confidence. And this is going to be controversial, but the meme coin communities give me confidence too. All this trading back and forth and swooshing of buckets, like you mentioned, gives me confidence in this ecosystem, is because 90% of crypto is casino games. Go to BNB and look over there. It's the same crap. Go to Ethereum, look over there. It's the same crap. You have all these casino type games going on, mainly meme coins. And we have it really flourishing in our ecosystem because people are bored, and that's good that they're doing this meme coin game. It gives me a surety that our ecosystem and the people are still here, and then people are still building. People like Buck, people like Alex. Man, Alex and his new news is blowing me away. I love what he's building. I love what all these guys are doing. Power City's coming soon. You're going to see new protocols launching. We got the Fetch Oracle. We got Mintra launching. A lot of different protocols, man. It's super exciting. I'm super stoked. I still think we might see a DeFi summer. I don't know. We could here in another couple months, whenever the Fetch Oracle rolls out. We're still waiting on that, which is being produced by Liquid Loans, if you guys don't know. But I know it's coming. I'm in their Telegram chat. I see Gamma's kind of he's kind of an ambassador, I guess. Gamma's the ambassador of Fetch Oracle. And so he's out there educating different teams. He's educating different protocols on how to use the Oracle. He's onboarding people. He'll be kind of the front and center. If you want to run a Fetch Oracle node, he'll be kind of the go-to guy who'll be teaching all that information. I plan on running a Fetch Oracle node just because we're already doing a bunch of Pulse Chain validators. And so you could use your same server for that particular that node. So from my understanding, I don't know all the details yet, guys. So don't quote me on any of this stuff but it's coming. And that's what's super exciting. If we had nothing going on, Dane, if there was nothing on the horizon, that's where I would lose hope, and I'd get scared, and I'd be like, you know what? I guess it's maybe time to find somewhere else to play. But man, we just got so much going on, man. That's my sentiment. So, like I said, but you guys are all got to make your own financial decisions. And like Sami says, if it's too painful, you can always push the sell button.
Yep, absolutely. Absolutely. So make sure to smash the likes and subscribe on your way out, you guys. We're here to pump everybody's bags. We appreciate you tuning in. For that, have a great day. And
Hey, guys.
we'll see you later this week.